Hello and welcome to the Strategy of the Week, Nailing Profits with the Midas Touch. My name is Angel Clark, Creative Marketing Manager here at VectorVest. For those of you that might be wondering what the Midas Touch is, it started out as a simple but very effective way to identify major reversals, sustainable reversals in gold, a very volatile, very difficult commodity to analyze. These reversals were identified using a graph layout that made it easy to see through any amount of volatility and pick up on a specific chart pattern that VectorVest discovered repeatedly led to major long-term trends. A chart pattern, by the way, that only VectorVest subscribers would have access to. And it wasn't long before there was another major discovery. The Midas Touch wasn't just for gold. It could be used to spot these trends in any stock, ETF, industry, or sector, and it could do it almost instantly. So let's move over to the program and take a look at how and why the Midas Touch makes it so easy to spot those long-term trends. I'm going to start with the original way that the Midas Touch was used when it was introduced, and that was on the HUI, the Gold Bugs Index. Even though the Midas Touch can be used for any security, gold has a lot of interest right now. That's because it presents a huge bottom fishing opportunity for investors, and those are the opportunities that really help you hit the jackpot. As I load about 10 years of history for the HUI, you can see that it has some crazy price swings. In fact, let me just change this to a line graph, and that will help you see it a little bit better. It's nearly impossible to tell when one of these sharp pullbacks is going to turn into a major correction. The momentum, shown down here by relative timing, is also all over the board. But if we go up to our graph layouts and select the Midas Touch, suddenly the picture gets much clearer. That's because we're using long-term moving averages of two of VectorVest's most powerful indicators, the stop price and relative timing. Let's start with that stop price. VectorVest individually calculates the stop price for every security in the system every day. Currently, that's well over 8,000 securities. The stop price is an indication of when to close a position, and it's based on a 13-week moving average that's been adjusted based on the security's fundamentals. So factors like value, earnings, safety, etc., the better overall quality of the security, the lower the stop price is adjusted. Lower quality means the stop price will be adjusted higher than that 13-week moving average. As Dr. DeLito researched the solution to spotting major gold trends, he found that smoothing the stop price even more by using moving averages worked great. He ended up landing on a crossover of the 10 and 65-day moving average of the stop price. The concept is that when a security is bouncing around all over the place, you need to really slow things down if you want to see the true underlying trend. And while a crossover is a nice, very straightforward signal to use, it's subject to a lot more whipsaws than you would like when used all by itself. So, Dr. DeLito added a confirming signal. And what better indicator to use than relative timing? Using this indicator for confirmation would add extra assurance that momentum was on your side. RT is able to calculate momentum by analyzing three different aspects of the price trend: direction, magnitude, and dynamics. So instead of just looking at which way price is moving, it's also taking in how much price has moved and how fast has it moved over a variety of time frames: day over day, week over week, quarter over quarter, and year over year. It is very quick to respond to price, so slowing it down was essential for this specific purpose. Studying the HUI, adjusting the moving average, and reviewing the results, Dr. DeLito settled on a 40-day moving average of RT as the ideal fit. And that brings you to the layout we're looking at right now. For a trend signal, both the RT and the moving average crossover had to be in agreement. So for an uptrend, the shorter term moving average had to be above the longer term, and the RT moving average had to be above the center line, which marks favorable from unfavorable, and simply vice versa for a downtrend. So how effective is this? Pretty darn effective. This chart shows every signal based on the HUI from November 24, 2004 to February 14, 2014. You can see that it nailed the takeoff of every major uptrend gold had. Back here on July 12th of 05, another one July 13th of '07, another big one January 7th of '09, and a continuation April 21st, 2010. And while there were a few false signals in the last 10 years, they were pretty few and far between. Overall, this system did an amazing job of keeping you on the right side of the gold trend, including keeping your portfolio from imploding when gold crashed. You can see a big crash here, and of course, a crash here and a continuation of that crash. You can also see that currently we are very close to getting that next signal in gold. So you want to keep your eye on this chart in the program, or you can listen to the daily color guard reports on Monday where we review this information for you. That way that signal won't pass you by. It's a huge opportunity and you don't want to miss it. But this chart right here, the accuracy it shows, is why Midas Touch drew so much attention. Nothing like this had ever been done before. And as great ideas tend to do, it evolved. Just as I mentioned earlier, we found that if we broadened our scope to other industries, the Midas Touch still did an incredible job of nailing the big trends. And we shared this through essays in the views and strategies of the week that showed you exactly what to do to use this method for your own investment decisions. It just so happens I have a summary of that information for you, just in case you want to review them and learn a little bit more. Be sure to pay special attention to the ones in green. These were significant strategies, and the videos did a really great job of showing you how to use them. You'll see that in 2011, Dr. Toledo started using the Midas Touch to cherry pick individual stocks. Just quoting from his essay, I looked at hundreds of graphs, marveling at how easy it was to identify trends and pick winners from losers. Sure, it's not perfect, but I'll bet it will make you a better stock picker. Well, one of our elite subscribers must have remembered that comment, because when Dr. Toledo created the Cherry Pickers Challenge, that was on March 15, 2013, Mr. Kevin Moore won first place in the competition, and of course, he used Midas Touch. He put his own unique twist on it, though, and called it Colt 45. Colt stood for character of line trends, and the 45 was that you wanted to see those lines moving in a 45-degree angle. How you apply it is to load the Midas Touch graph, change your time period to 3 months, and look for new highs. You can do this with industries, sectors, ETFs, top VST stocks, dividend payers, derby winners, your watch lists, absolutely any security. And yes, as simple as it sounds, that 3-month high is an essential component. It took a great method and made it even better. So let's see it in action. You can do this with any list of stocks, but for our presentation today, I'm going to use it to prepare you for the pending gold signal. We'll go to the industry viewer. You'll notice gold is pretty hot right now. In fact, it's the third fastest moving industry ranked by relative timing. Double-clicking will load the stocks from that industry. And of course, we could start our cherry picking. But before we do that, I want to show you a little history first and introduce the fine-tuning technique that Dr. Toledo uses to take profits while they're hot. We'll go back to the last uptrend signal from the Midas Touch Huey. And remember from our graph, that was August 28th of 2012. So these are the stocks that we would have seen in the order that we would have seen them on August 28th, 2012. This allows me to test this method, see what I would have chosen back on this day and how it would have worked out. I'm going to go ahead and graph the top 30. You can see that we already have our Midas Touch layout ready, but we want to take a look at a 3-month graph. So if we were looking at these stocks on August 28, 2012, that would mean our 3-month period would run from May 25th to August 28th, and we can change that down here. This way we won't let anything influence us that happened after we would have selected this stock. This is exactly what we would have been viewing on our last up signal for gold. Does it meet the Colt 45 criteria? Well, the criteria is that all of these lines have to be hitting new highs. The moving average of relative timing is, and it looks like the short-term moving average of the stop price is, but not the longer term. So this is a no. Even though these are crossed to the upside and the relative timing moving average is positive. Let's see if we fare any better for the next one. This is NSU. It's also a no. Once again, we don't see a new high for that longer term moving average of the stop price. It's a no, a no, a no, no. There we go. PPP is the first stock to meet our conditions. Looks great. We've got the 10-day moving average of the stop price above the 65-day, and they're both hitting new highs for this period. If you're not sure, you can always put on the crosshair cursor, and that can help you out. We also see that relative timing is peaking for this period as well. But now it's time for me to tell you about that fine-tuning technique that Dr. DeLito uses. In the past, Dr. DeLito has talked about keeping an eye out for that 40-day RT moving average to start curling over. When you see that happening, you need to be out of the stock. Sometimes that comes a little later than you'd like, though. Dr. DeLito likes to take his profits when the taking is good, and he's found a great way to do that. He simply adds a 5-day moving average of RT to the Midas Touch graph. So let's go ahead and do that. We'll right-click on RT, add moving average, simple, and we'll put 10 on there, and then dial it down to 5. Make a note here, you don't have to look for this indicator, this 5-day moving average of RT, to be hitting a new high. You just want it to be above the 40-day moving average of RT so that you can use it as an exit. Once this 5-day moving average of RT starts breaking down and crashes through that 40-day, that's when you want to think about taking profits. In the case of PPP, the 5-day is well above that 40-day, so we're good to go. We'll put it on our list to buy. Let's keep going. Another no. We don't have a new high in the longer term moving average of the stop price or the relative timing. Another no. Another no. No, 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 no. And then we get to sand. Sand is the next stock to be Midas Touch worthy. The only thing is that 5-day moving average looks awfully close to going below that 40. It's not there yet though, so we're going to be strict and we're going to put it on our list to buy because technically it does meet all the conditions. If you would have personally skipped it though, I don't blame you. Let's continue on. No, 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 no. And AEM is our very last stock to qualify. We've got new highs in all of the indicators over this 3-month period, and the 5-day moving average of RT is above that 40-day moving average. Actually, I went through all the stocks in this industry, and it ended up taking me less than 5 minutes for about 140 stocks. The Midas Touch allowed me to narrow it down to just 3 candidates. Now, let's extend the graph and find out what would have happened after we selected these stocks using the Midas Touch. Let's find our buy date of August 28th, 2012. That means that we would have bought AEM at $46.95, and it looks like that 5-day moving average crossed below on October 18th at $52.69. A pretty nice profit. And not too long afterward, look what happened to this stock. It's lost more than half of its value. Let's take a look at sand. Setting our date back to our purchase date of August 28th. There we go. And if we were very strict, let me zoom in so you can see this. Sand did exactly what we thought it was going to do when we looked at that first graph. We thought, boy, that 5-day moving average is getting really close to breaking through that 40. It did do that just a day later. So you would have been in at $9.76. And out, if you were following this very strictly, at $9.71. So pretty much a wash. Then the last stock we cherry picked, PPP, $8.28. We got in at $4.65. And let's see where we would have exited. It looks like our moving averages met right around here, but it didn't break the line. That still wouldn't have been a bit too bad of a place to exit. It looks like it definitely crossed below. Let's go one more day. Crossed below on October 31st. The stock was $7.42. Now, in the case of a stock like Sand or even PPP that we're looking at right now, you don't have to be so severe that you're exiting within zero point zero 0.01 points of that crossover, but consider it a warning bell and one that you don't want to ignore. So this is the time where you really want to get your ducks in a row, make sure that you have a sensible stop loss on there that will allow you to take plenty of profit or cut your loss short. So even if we had waited a few days on this and just to see if the moving average would get better, we're still in that same range, $7.48. Now we can clearly see this is crossing to the downside and it's still pointing downward, meaning that there's no recovery indicated. Then if we continue out even further, you can see that what happened to the other stocks happened to this stock as well. It held up a little bit better, but it still went into a pretty severe downtrend. So that 5-day moving average crossing below the 40 really helped us out on our exits. It helped us take profits quicker. To look at it another way though, let me show you how big of a difference that made. First, I did a quick test of all 3 stocks that met our Midas Touch conditions, so PPP, Sand, and AEM. And the results were great. From August 28th, 2012, when we got the up signal, to December 18th, 2012, when we got the down signal from the Huey, these stocks gained almost 22%. And that was way better than the market. The S&P during that time only gained an average of less than 3%, so about 7 times the market's performance. So if we had just used our trend signals from the Huey, it would have worked out fine. But check out the annualized rates of return. That ARR lets you know whether taking your profits quicker worked out better or worse. On the right-hand side, I show you what those results would have been had you used the 5-day moving average of RT as your exit. On 2 out of the 3 stocks, we would have taken higher gains, and we would have done it in much less time. PPP, we closed out with a 59% gain instead of 36%. And for AEM, we closed with a 12% gain instead of 10%. Not a huge difference, but again, look at the time frames. So for PPP, the average annualized rate of return is 119% a year. With the 5-day moving average exit, it's 339%. With AEM, the average annualized rate of return is 35%, but looking at how quickly we got out with the 5-day RT moving average, it's up to 87%. Our profits were much more efficient with that earlier exit. This more than doubled our rate of return in both PPP and AEM. We did miss out on Sand, but I'm okay with that, especially if I'm getting these kind of results. An impressive refinement. So what gold stocks should you be keeping an eye on for that pending gold signal? That's easy. We just apply the Midas Touch today with our new refinement. Here we are back at the current date. Our mining industry is in 3rd place. We're going to double click and I'll load the top 30. And once again, we'll graph them. The Midas Touch layout is applied. We're going to go to 3 months. And the very first one we see is a yes, ASM. All new highs in all of the indicators, and the 5-day RT moving average is above the 40. Next, nope, nope, no, 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 no. And we have a yes. And this one's a little close, so you may need those crosshairs. But it is hitting a new high in all 3 indicators that we're looking for. And of course, its 5-day RT moving average is above the 40. Let's keep going. NSU. Once again, I did check all of these stocks because it didn't take me very much time using the Midas Touch, and NSU was the last candidate in this entire industry group to meet the Midas Touch qualifications. So we've got ASM, OSKFF, and NSU. And you also now know how to keep your eye out for more candidates as the gold trend hopefully finds its feet. I don't think anything could be faster or simpler. Apply Dr. DeLito's refinement, and you'll be well on your way to nailing profits with the Midas Touch. That wraps up this presentation. I'd like to thank you for joining me. As a reminder, you can also join me for the live Q&A webcast on Monday. And as always, you can visit VectorVest University for a ton of great information on making money with VectorVest.